Hello and welcome to today's FX Times Daily Market Recap. I'm CMS Forex Market Analyst Nick Nassad. Today is Monday, November 9th, 2009. As we talked about in our morning brief, the euro and others rallied against the greenback in Sunday's and today's trading. Stocks were higher around the globe, and the Dow Jones Industrial Average closed up more than 200 points, with stocks in the US hitting fresh 2009 highs. The rally came after the Group of 20 industrialized and developing nations pledged this weekend not to remove economic stimulus programs, which have helped to pump massive amounts of cash into markets that continue to funnel into higher yielding assets. Economists and traders have been looking to see if the G20 would mention the dollar and its weakness, but there was no such mention, and therefore the markets had a green light to buy riskier assets. The euro-dollar's pairs rally stalled at the 1.50 level in New York trading, however, as an auction of 3-year Treasury notes drew rather strong bids, keeping a lid on dollar losses. In fundamental releases from the Eurozone, German industrial output rose 2.7% on the month in September, a figure that nearly doubled expectations. On the year, production declined 12.9%, an improvement compared to August. The data shows that German industry is recovering quicker than expected, and German firms should benefit as companies around the globe restock inventories. The increase this month was led by a 5.9% increase in production of investment goods. The German trade balance, meanwhile, unexpectedly narrowed in September, falling to 9.9 billion euros in seasonally adjusted terms. Though the data had the surplus shrinking, there was an overall increase in trade. Exports were up 3.8%, higher than expected, and a good sign for the country's export sector. However, imports were up an even higher 5.8%, which was the reason the surplus declined. The monthly rise in imports was the biggest jump, in fact, in over a year. The data lends support to evidence of a gradual pickup in global trade, and that is a good sign for the German economy, which was the world's biggest exporter of goods since 2003. The positive fundamental news added to global stocks, which were higher, and a sense of risk appetite, which fueled the euro's gains. The afternoon session did see some moves that we didn't cover in our morning brief. First, the pound-dollar pair, which had roared to a 3-month high near 1.6840, which was about a 230 pip gain from a low to high, retraced about 50% of those gains in later New York trading, even reaching the 61.8 area, and after testing that level of support around 1.67, began another rally. The US dollar Canadian dollar pair, which had fell overnight in favor of the loonie, stalled around the 1.60 level just prior to the New York Open. That tested support from last week, but the pair managed to break down below that to reach the 1.055 level. Today's low in support tests a level from October 21st that had acted as resistance prior to a breakout that had us testing the 1.0850 level. We also can draw an upward sloping line of support connecting our two lows from around that time, which line up pretty nicely with where we stalled our down move today. For more technical updates, please visit fxtimes.com and watch today's video technical update by my colleague Fan Yang. You can also revisit some of the moves from overnight in our morning brief. In a look at what to expect tonight, Japan will be posting data on money supply and bank lending, along with its current account. The UK will release data on housing prices in the form of the RICS House Price Balance and data on consumer spending via the BRC Retail Sales Monitor. Australia, meanwhile, posts a measure of business confidence. Overnight, Japan has 2 more releases, the Eco Watchers Survey, along with preliminary machine tool orders. Continuing overnight, the UK posts several more releases, including its trade balance, the DCLG House Price Index, and its measure of leading index. Germany, meanwhile, will post its final consumer prices, measure of wholesale prices, and the ZEW economic sentiment. Out of those indicators, the last one, the ZEW economic sentiment, has the biggest chance of moving the markets, as it is a leading indicator as it measures the sentiment of financial investors and analysts. The figure was at 56 in October and is expected to see a small decline to 55. The fundamental docket in the US tomorrow is very light, with no major releases, but there will be plenty of Fed speak as FOMC members Lockhart, Yellen, and Tarullo are all set to give speeches. And that'll wrap up today's daily video recap. Again, I'm CMS Market Analyst Nick Nassad, and join us for more videos at fxtimes.com.